Hello, thanks for joining me for another episode of the Retirement Cafe podcast. This week's conversation is an important one. It's about becoming a more rational investor. In late 2022, I went to a business strategy workshop as a guest of Dimensional Fund Advisors at the Chicago Booth School of Business in London, and was delighted to hear this week's guest address a packed audience. Cameron Passmore has been a leading advocate for evidence-based systemic investing for over 20 years. He is executive chairman and portfolio manager at Canadian wealth management firm PWL Capital and the co-host of the Rational Reminder podcast. Cameron's hugely successful podcast has featured many of the giants from the world of investing and behavioural finance. People that, quite frankly, have changed the way I advise my clients. He aims to help make his listeners better, more rational investors. His guests including investing research gurus Professor Ken French, Nobel Prize-winning Eugene Fama, two of the giants in the world of index investing. I loved my conversation with Cameron. Unsurprisingly, we focused on the power of the stock markets, the timeless wisdom of investing in the great companies of the world, and how the wisdom of crowds applies to investing behaviour. Cameron also shared his definition of evidence-based systemic investing and some fascinating stories and insights from his many conversations with experts in this field. In the show notes, you'll find links to all the episodes he signposted to us and that specifically offer further depth of insight into what makes for a successful investment strategy for your retirement. So sit back, grab a coffee, and hopefully you'll enjoy my conversation with Cameron Passmore. Welcome to the Retirement Cafe podcast, Cameron Passmore.
Justin, this is awesome. It's so much fun to be on this side of the mic.
Absolutely. Yeah. Now you are a podcast host extraordinaire, and we'll get to that. But Cameron, we met only a couple of months back in London at the Chicago Booth School of Business, maybe is that what it's called? I think.
Yeah.
At a conference, which it was fantastic to get to know you. Now, of course, for those who don't know Cameron is a Canadian, and we met at this conference because he was going to be one of the main speakers, and I had a thoroughly great time listening to his wisdom, and of course caught up with him for a cocktail afterwards, and he agreed to come on the Retirement Cafe podcast. So once again, welcome, Cameron.
Well, thank you so much. And it was such a great trip. I mean, haven't been to London in over 20 years, so it's a phenomenal city. We had a blast, and it's so great to meet you and so many of our mutual colleagues in the industry. Yeah. So Cameron, your company is PWL Capital in Canada. What do you do? What services do you provide? So we're an independent wealth management firm, 100% employee owned, and we serve right now around 1,100 families in Canada.
Wow.
Manage roughly $3 billion. So it's a fully scaled, fully developed enterprise serving fee-based, independent wealth management advice that's taking the investments as well as financial planning and delivering that service to clients. We view ourselves as fiduciaries. We view ourselves as being on the same side of the table as clients. We have no proprietary products for sale. We sell advice. We manage portfolios. We integrate with other professionals. We make sure that the service we're delivering aligns a client's objectives with what their portfolio and their tax situation is and their entire family situation. So we're looking to build long-term relationships with, frankly, really great people who want to make smart decisions with their money. Yeah,
fantastic. Now, of course, the Retirement Cafe podcast is listened to predominantly, I think, by retirees or people who are approaching retirement.
Right.
What is a Canadian retirement typically look like? What ages are people retiring at, and what are their challenges?
Well, I doubt it's very different than your world, Justin. And I mean, I have our experience. I don't have all the data on the Canadian situation in general, but suffice to say, fewer and fewer people have defined benefit plans. There's more reliance on individual decisions to fund their retirement. We're an industry in Canada dominated by the banks, and the banks and our industry is really becoming much more planning focused, which I think is a good thing. I think we're slow to adopt the investment philosophy that you and I certainly share, which is, systematic, evidence-based, call it indexed approach. So I think we have higher than normal expense ratios on funds. I think we have a low adoption rate of index funds in general for all kinds of different and systemic reasons. But I think there is a greater appreciation, certainly in the media and certainly among the people we're talking to, about I have to do this right. I have to get the right plan, the right planner, the right team in place, the right tax consultants, the right fee structure, the right fiduciary approach. So I think there is a change happening. We're living part of that change, being an independent supplier of service in this space. And it's interesting when you start working with these people, like the lights start to go off. Okay, what is my safe withdrawal rate? How much money do I need? How long will I live? How do I transition the funds to the next generation efficiently and effectively? So there's a lot more interesting questions that are coming up in people's minds that we have great conversations with people about.
Yeah, you mentioned there that the defined benefit pensions are much less now. That's happening hugely in the UK over the last 20 odd years. Is there some kind of government-sponsored pension planning going on, or does every company enroll you in a scheme? How does it work?
So there's a mandatory, what's called Canada Pension Plan, or in Quebec, the Quebec Pension Plan, but there is a plan that is mandatory to be contributed to for all employees, and there's a match between employer and employee that goes into that plan. And that's a very significant, well-funded plan that does cover a meaningful part of anyone's retirement income. There's also what's called old age security, which is a non-contributory plan that does pay an amount at retirement. Then there's other, income tested support plans beyond that. But the Canada Pension Plan and old age security do form part of the vast majority of retirees' income, a vast number of retirees' income. That's an important part. And then after that, I think it's safe to say that most defined benefit plans are, government sponsored, for example, public servants or teachers like that. But most companies have gone away from defined benefit plans that have either flipped to some sort of matching plan. Like in Canada, our retirement plans are called RRSPs, Registered Retirement Savings Plans. So you can have a match plan like we have in our company, where if you put in 3%, the company matches 3%. That's quite common for many, many people. But anything over and above kind of that, CPP and OAS, it's up to the individual to figure out how they're going to afford that. Sure. And, one of the big challenges that I find our clients face is the complexity when they get there, when they get to retirement, the complexity of then turning that retirement savings into an income stream. The beauty of the defined benefit scheme was that you kind of knew what you were going to get. If you did your service 20, 30 years, or even, 10 years one company, 10 years another, you kind of knew what you were going to get. And that investment decision and even the contribution rate, to a certain extent, how much you paid in, was taken away from you. I mean, they were a beautiful thing to find benefit schemes. Beautifully liberating too. Yeah. I mean, my partner, she's been in the teaching system for almost 30 years. This doesn't enter into her head at all. Safe withdrawal rate, not my problem. Cost, I don't know. Leave it to the true professionals, like the Ontario Teachers Pension Plan, which is a world-class pension plan. It's a beautiful thing. I agree with you. Yeah. So how when you and then we have quite a highly complex tax system when you get out the other end as well. Your cash is taxed in one way, and your investments are taxed in another way, and your pension is then taxed in another way, and some is tax free and some is not, and then some some you pay different amounts when you die, and again, massive complexity with it all. And of course, for the individual, they're trying to manage all this at a point in their lives where they may have had no experience, I suppose, of investing and taxes, etc. Is that a similar circumstance to yourself? Absolutely. And then you throw into the mix of this, we have an industry that was built up on sales, originally selling stocks to stockbrokers back in the 50s, 60s, 70s, morphed into selling mutual funds, which is when I started back in the early 90s. We were paid by mutual funds. You got those biases going on. You have an industry that Charlie Ellis, for example, on a recent podcast talked about being wildly overcompensated for what is done and delivered. So you got this industry that loves to capitalize on revenue generated from product, mixing in with these worries and complexities that the clients have to deal with. Like it's a tough cocktail that's going on here. And then you throw in behavioral biases. Another bias, for example, there could be compelling reasons to look at annuities. Well, annuities in Canada don't pay like trailing commissions or large fees. They do pay a relatively small commission, but for a lot of people, annuities might make perfect sense. But if you don't have an independent advisor, you may never see that in your proposal.
Yeah.
What about the volatility of your asset mix?
Yeah.
Like if an advisor might be compensated more for selling you equities or an equity mutual fund, that may or may not be a bias. They may have a different compensation scheme for that. Well, how does that impact the individual's ability, willingness, and need to take on risk in the portfolio? So you start running volatility or Monte Carlo analyses in the retirement, that might lead to a different decision point. There's a lot going on there.
Cameron, your podcast, the Rational Reminder podcast, which remind me, when I asked you, comparable to my little podcast, you told me how many kind of downloads you get from each episode. Just remind me how many that is on an average episode. Yeah.
So first of all, we don't worry about numbers in our world. We just try to do the best possible job we can. So we're not numbers obsessed. I think now we're about somewhere between 200,000 and 300,000 downloads a month. It's a weekly podcast. Last year, I think the total was about 1.8 million downloads, which was, 40, 50% over the last year. So it's grown. It's a tremendous amount of fun to do. The one benefit that comes with size is you end up getting access to really interesting guests.
Sure.
So it becomes a bit of a flywheel snowball effect that happens. So when you reach out to a guest and you can, that's where numbers do matter. You say, look, you're an author. We have a podcast. We expect to have 25,000 downloads within 2 weeks. That often gets you really interesting people.
Absolutely. So tell me what was the original purpose of the Rational Reminder podcast? What was your intention? What was it trying to achieve?
So we had a strategy at our company going back 5 to 8 years ago of just create content. This is kind of the age of content. So some people were doing YouTube videos and some people were doing blogs. Some people were doing white papers. So just create content so it goes on your website to help with SEO. It was as simple as that. And a couple of financial podcasts that we would listen to, it's like, well, they're two guys that are just talking into mics. Ben and I said we could do this. So we just literally bought 2 mics and started talking into it. Didn't have a clue what we were doing. And we just started experimenting. And that's a big part of our culture is experimentation. Just try stuff. So we just tried it and, this is interesting and very small numbers. And then, let's have a guest. And then you keep going and do an us episode and then a guest episode. And then we ended up getting some larger guests, like some friends, mutual friends. I'm sure Larry Swedrow came on and Dan Solon came on and other people who are experts in our field that I'm sure a number of your listeners have heard of. And if they've not heard of them, they should look into both Larry and Dan. They're tremendous resources in this space. And we just keep our head down and kept doing the best possible job we could. And we got Ken French on for episode 100. I think that's where the breakthrough started to happen. Right. We get Ken French on, and then episode 200 was Eugene Fama, and then a few weeks ago we had on Nobel laureate Robert Merton. So you start to get larger guests. We have Daniel Pink coming on in a few weeks.
Wow!
It just becomes this incredible creative outlet that takes our view on sensible investing and financial decision making, which is our mission. You take that lens through all these different conversations. We interviewed Professor Anna Maria Lusardi late last year talking about financial literacy. A phenomenal interview. We interviewed just yesterday a lawyer to talk about, there's a lawyer who sues financial advisors for either fraud or negligence. What an interesting perspective, but you get the expert on, but then you put it through the filter of how Ben and I look at the world and how our audience and our community is expecting us to view the world. So it's a lot of fun. Yeah. And it's had enormous unintended consequences, like training, like I mean, if you're doing the research anyways, you end up packaging your research and your thinking on a single subject in a single episode that can be then shared with, current clients, potential clients, the media. Probably the biggest unintended consequence is finding talent. So we added, I would guess, probably 20 people to our team in the last 18 months. Vast majority came from the podcast. Once you're a listener, once you hear it, you listen to Ben and and I think we bring a fair amount of energy and thinking to this. You create this community. It's like people say, you know what, I want to be part of that. Independent, fee only, good advice, solid, based on evidence, do what we think is the right thing, for great people. I think it's pretty compelling if you're into it.
And the thing that has really struck me, being a listener who's kind of come slightly late to the party and trying to catch up with some of the great episodes that you've mentioned so far, is that I'm thinking to myself, this is if you are sat there and as a UK listener, if you want to go and, I'll put a link in the show notes to the Rational Reminder podcast, because this stuff that you and Ben are talking about and interviewing the experts about, this is kind of timeless wisdom, and also it doesn't matter this is Canadian based. It really doesn't. It doesn't matter that the investors, the experts that you're talking to are often American. This is timeless wisdom about investing in the global world stock markets, in investing in those great companies of the world, of how to look at it and the lens to look through. I mean, the benefit I can imagine that you're providing with those significant download numbers. This is about really is about protecting people and making and helping them make wise, sensible investment decisions.
Absolutely. Now, the early episodes were more Canadian centric, but right now we make sure that they're all applicable globally. Yeah.
So, in a nutshell, I mean, for people who are not familiar with the kind of evidence-based systemic investing, what does that mean?
It means a lot. You look at what's happened in the past 50 years. It's unbelievable what's happened in the past 50 years. You had this confluence of, first of all, creating the database of market returns. 1960, you wouldn't know what the S&P index returned. The data wasn't there. So you had the combination of collection of the data, technology came out that you could actually analyze the data, and then financial economics became a thing. University of Chicago being arguably in some people's minds where it all started. So you got this confluence over the past 60 years of research, data, technology coming together to show that, markets do a pretty good job of delivering returns. Number one, diversification makes a lot of sense. You're not likely to beat it, and you can basically be a top quartile, if not better investor, by buying a diversified collection of great companies, call it an index fund, seek out independent sources of unique return. These are called them factors, right? Market has a higher expected return, but other factors have meaningful, unique sources of expected return. You put that in a portfolio, make it rules-based, make it systematic, globally diversified, set it, rebalance it, forget it as best as you can. Stop reading the daily newspaper. That's not going to change and ignore predictions. Everything that is known, especially with technology, you have an opinion about the market. I have an opinion. So do millions of other very well paid and highly incentivized people. They all have the same information. Doesn't mean you're right, I'm right, they're wrong. It just means that anything that is different than what is priced on the market is largely going to be random. And I know that is very contentious in our industry that wants to sell to people what they want to buy. Oh, Justin, you can predict the markets. You're my guy. That's typically what people want. So as soon as people, my experience, find out kind of what I do, well, what do you think about ... What do you think about interest rates, inflation, the market, gold, crypto? Pick the topic you want, right? What should I have in my portfolio? What do you think about this stock, that stock, oil, energy? It's always about what do you think will happen? Well, the best predictor of what's going to happen is already in the price. Classic wisdom of crowds. Just embrace it. Put your arms around that. Hug it. right? And then link that back to what's important to you and your family. How much volatility do you need? Like, you don't even need to engage in this nonsense of trying to predict. You have 60 years of unbelievable. Eugene Fama, who we both know of, we don't know them personally, but we've been following Eugene Fama, you and I, for years.
Yep.
He has been working on this 7 days a week since before I was born. Literally. Like, I'm going to go and predict the market when you've got an academic, and he's only one Nobel laureate, brilliant, arguably the godfather of this whole movement. But it's just been an unreal time. And these are things that we learned last year in our podcast from incredible interviews with people that talked about, Mac McCown, Gus Sauter from Vanguard, Robin Wigglesworth, who wrote the brilliant book Trillions. Like, the research that has been done and brought together, and the technology from great companies like Vanguard, Dimensional, BlackRock, the list goes on, right, that are bringing incredibly effective, efficient, purpose-built tools at very low prices, which you can then separate, which is important for retirees, separate all of that thinking with the advice that you and your team bring, me and my team bring. I'll pay this for the product, I'll pay this for the advice. Let's find out what I'm getting here to make a meaningful difference in my retirement. That's what really matters.
What I find really, really interesting is, again, this thing of the human nature is that it's really compelling. If I say to a prospective client, you know what, I've identified this fund manager, and he's got 5-star reviews, and he's outperformed the market for the last 4 years, and just by saying those things, you can see people starting to nod and yeah. But actually, that gives me no inclination of what he's going to do in the future. And then their faces drop. And it's like, what? What do you mean? Surely it's a bit like for us, a football team, maybe for you, a hockey team. Surely if they keep winning the championship, then there's a chance they're going to continue to win the championship. How do you wrestle with that kind of psychology that is, to a certain extent, built into our way of being?
We are in, Morgan Housel argues, the only field where brilliance doesn't make you better. Like, you want the most brilliant surgeon, right? You want the most brilliant auto mechanic. You want the most highly practiced tennis professional, right? Our field, though, is full of people that are brilliant, and all that brilliance gets priced into the stock. So you get to benefit as an investor from all of that brilliance. You don't need to try to predict. They've done the work. The analysts, think of all the analysts in London, New York City, Sydney, Tokyo, wherever, that are doing all of this analytical, and they're brilliant. There's no negative judgment. The fact is, they are brilliant. Have CFAs. They're absolutely brilliant, well-paid, highly incentivized people doing great work. Because that has been done, we don't need to seek out the brilliant fund manager that's going to beat the market. Benefit from what they're all doing. It's just such a beautiful, elegant, clean, low-cost, tax-efficient way to manage our retirement funds.
Yeah. I often look to nature to try and help me steer with this stuff. And I was explaining to someone earlier about, if you see an acorn grow to a young sapling, you can't shout at it and say grow faster.
Right.
It'll just do what it needs to do when it needs to do it. It'll handle the seasons. It'll handle the winter. It'll handle the spring, the summer, the autumn. It'll just get on with it. And 60, 70 years later, you will have a beautiful, beautiful oak tree. And it doesn't matter, you could have if you pull it out every 3 seconds and every 3 months and try and plant it somewhere else, which will make it grow faster, you'll actually, you'll cause it harm rather than actually help it do what it needs to do.
Yeah. I couldn't agree more. And that's why it's so important to, another thing Morgan Housel talks a lot about is, and I talk about this a lot with clients, is goalposts moving. I'm not opposed to people increase the net worth, but what are you increasing your net worth for? Like, is it for more all the time? Do you need more returns, have more lifestyle? And then to pause and reflect, does this extra lifestyle make me happy? Like, what is my contentment level? I watched an interview with Warren Buffett on the weekend, and he says, look at all the advancements happened in the last 100 years. Like the poorest person today, in many ways, is better off than the richest person 100 years ago. Cleaner water, access to Advil that didn't exist back then, like basic medicine, transportation, communication, entertainment. Like it's been remarkable. However, happiness levels aren't necessarily higher today, which is really interesting. Like our world, right? Like you and I have much better access to all these things I mentioned than the richest people 100 years ago. It's truly mind-blowing. And my cell phone's the same probably as Jeff Bezos' cell phone. My access to entertainment is the same as Bill Gates. My access to clean water is probably the same as Elon Musk. It is truly remarkable. My access to books, which give me enormous entertainment, which I know you know about, my access to books, same price, same Kindle, same tools, that's available to all those billionaires I mentioned. I mean, it's incredible. So it's that kind of perspective that I think is important for people as they think about retirement and saving and how they frame, how they manage their money through the lifetime to get to their place of contentment long term.
Yeah. This might put you on the spot a little bit.
That's fine.
Retirees or the people who are listening to this podcast are already interested in getting greater knowledge, which is fantastic. So just linking back to the Rational Reminder podcast, if they'd got an opportunity and they could only choose three listening slots, right? Which ones would you suggest that they listen to?
Oh, there's so many good ones. It depends on what's important to them. If they want to learn about portfolio management and portfolio structure.
Yeah, I think that's stick within that kind of guideline.
In that frame, I mean, you can't beat
framing.
You can't beat Eugene Fama, Ken French, Bob Merton, Cliff Asness was very good. David Booth was exceptional. So I mean, they're giants in our space. I mean,
Right.
There's many others. Larry Swedrow, we had a very good conversation with Larry on retirement. If you're interested in annuities, Alexandra McQueen, she was a very early guest of ours. She's an annuity expert and retirement planning expert in Canada. Fred Vitisse, he is like the arguably expert in retirement in Canada. Wade Pfau, PFAU, he's an expert from the U.S. on retirement. He was on. So if you're interested in retirement investments, those would be the ones.
Yeah.
We've had a lot of interviews on happiness, time management. You know, Cassie Holmes, professor, was on late last year. She was phenomenal. Katie Milkman was on. If you have an objective, how to change. Ayelet Fishbach, who wrote a book, Get It Done. She was on early 2021, phenomenal, from University of Chicago. I just gave her book to all of our. Lisa and I have 2 children. She has 2 children. So I gave the book to all the kids. I mean, the list goes on and on. There's so many great people we've had on, honestly.
Fantastic.
And as you know, we don't make the podcast about us. It's like, okay, get the most as we can out of these conversations, and we allow them to go quite long to really dig into it. So if someone has the time and the interest and enjoys some of these guests, you can really, like, some of them go, like Bob Merton, Professor Merton was over 2 hours.
Wow. Yeah, I listened to it, and I know that I've got to listen to it again because it was a really, really informative interview. So there is the top 3 or top 20. Which
Sorry,
I will provide a list of, and I'll put all the show notes. I'll put all the links to all of those episodes so that you don't need to dig around for those so in the podcast notes. Now, again, you mentioned that you have, like myself, you have a great passion for reading. What are you loving at the moment?
Lately I've been into marketing, which I find interesting. So last year I did a whole phase on the work from home, working remote. I did a number of deep dives into that, which it's funny how we inserted this into the podcast just again as an experiment. And we had lots of positive feedback on that and lots of discussion in our community board. And I'm just curious how people take our businesses, how people decide to work with firms like you and I.
Yeah.
So I just finished a book on from Nancy Harhut on behavioral Economics in Marketing, which was a fascinating book. I'm reading one on right now called The Influencers, how 1 in 10 people in North America drive so many decisions by society just because they're influencers by nature. They make referrals, they create energy. So that is interesting. I right now I'm reading about a book a week.
Brilliant.
Yeah, I remember reading a good friend, client 5 years or so ago, and he showed me his book list for the year, and I was blown away because I would read like 3 or 4 a year, and he was like 25. And then I just started reading a bit more. Then I was on my Peloton January 1st last year, so 2021. I thought maybe we'll come up with a contest just to inspire people, because I would hear a lot of people say, I wish I could read more. And it's tough, right, with social media and TikTok and everything else going on to find the time. And I just put this contest out there. So we got this contest going, 22 and 22 last year. We rolled it over 23 and 23 just to inspire people to read more. And we have 700 people in this experiment that are part of this community that are exchanging book ideas and book reviews. And it's a lot of fun.
Brilliant. Yeah. And I'm sure you've got Seth Godin on your list.
Yeah, I just reread one of Seth's book on marketing. Yeah. Phenomenal, of course. Yeah. Man, there's so many. I mean, once you kind of look around in this space, and Kindle's so good, right? Yeah. People who read this book also like this one. We have Charlie Ellis coming up on our podcast. So I read, he just wrote a book called Inside Vanguard, which is a beautiful bookend for people interested in the business that we're in. Perfect goes along with a Robin Wigglesworth book called Trillions, which digs into the 50, 60 years I talked about, this incredible revolution that's happened in the past 60 years. So Charlie Ellis's book on that was just, he's a phenomenal writer.
Yeah, I've got Robin coming on the podcast.
Do you?
In a few weeks' time. So
yeah, Robin is fantastic.
I'm about halfway through Trillions at the moment. So
yeah, and you know a lot of the characters.
Yeah, it's really enjoyable. So I've recommended it to a few people. So of course you can also shortcut it by just listening to the podcast, which of course we all do. Well, Cameron, it's been absolutely fascinating just to hear a different perspective. I was very fortunate to, as I say, to listen to you in London and to hear about what a wonderful business that you've got, and there's this passion to help and educate people around the topic of money, and your continual kind of want to continue to learn and do it better. So thank you so much for taking the time from your very busy schedule to chat to me and to pass on your wisdom to the Retirement Cafe podcast.
That's very kind, Justin. Thanks for the invitation. And yeah, one of our goals is to profoundly impact how Canadians think about money. The podcast is going beyond Canadian borders. This is really important to us, and it's important stuff that matters. People can only change their situation in life by making different decisions. So we're trying to help people, get them the information, enable people to make better decisions.
Yeah. Well, thank you very much for what you're doing.
Awesome.
A huge thank you once again to Cameron for taking the time to chat with me. Head over to the show notes on our website at theretirementcafe.co.uk for links to the Rational Reminder podcast and Cameron's work. As ever, if you've enjoyed this episode, please do leave us a review on Apple Podcasts. It really does help. And if you're listening to this episode on your preferred podcast player, but you'd like to see who I'm talking to, then head to my YouTube channel, which is Justin King MFP, where I upload all of these conversations. You'll also find a vast array of videos about retirement planning, so there may be just something helpful for you there. So until next time, I'm Justin King, helping you feel more informed in your retirement.